Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at critical metals.
And if you find our talks useful, please consider subscribing, like, and comment underneath. It really helps us out.
It does.
Okay, so let's dive in. We're looking at a company today, Critical Metals, that is, it's so much more than just a mining stock. This is really a story about geopolitics.
It's all about geopolitics and, frankly, national security. We're going to break down what makes this company a potentially pivotal player in securing Western supply chains for rare earths.
And those are the elements you need for everything, right? Jet engines, EV magnets, all the high-tech stuff.
Exactly. And the whole story, the real investment hook, it all comes down to one asset.
Tanbreez in Greenland.
That's the one. It's considered one of the world's largest rare earth deposits. But the key phrase here, and you have to remember this, is outside of China.
Right. And if you're tracking strategic defense dollars, that's everything. A Western-aligned location is, well, it's where you start.
That scarcity factor is exactly why the stock has been so volatile. The market is trying to price in this massive potential.
I mean, you look at the 52-week range, it's just wild. It goes from $1.23 all the way up to $32.15.
That is an insane range.
What does that kind of volatility really tell us?
It tells you the market is pricing in two completely different futures at the same time. The floor, that $1.23, that's the risk of failure.
Permitting issues, Arctic construction, all that.
All of it. And the ceiling, that $32, that's the blue sky scenario. That's them landing huge defense-grade contracts backed by, say, the U.S. government.
And every little piece of good news just sends it flying.
We just saw that, didn't we? Some high-grade drilling news came out, and the stock shot up over 32% in a single day. The market is just incredibly sensitive to any sign of real progress.
But we have to ground this in today's financials. They're a development stage company.
Which means they're burning cash. They're spending way more than they're making, which is why the earnings are negative. It's expected.
Yeah, but I saw the revenue growth is pretty impressive, even if the total number is small.
It is. The trailing 12-month revenue is only about $500,000, but it's up 376% year over year.
Wow.
That kind of jump, even from a small base, it suggests that some early commercial activity is starting to kick in. They're slowly moving from just being an exploration story.
Okay, so they have the asset, they have the volatility, but how do you turn a huge geological find into an actual business? What's the plan?
The plan is very integrated, and it all starts with de-risking future demand. So Tanbreez is aiming for production around 2026.
Which is still a ways off.
It is.
Yeah.
But what gives investors a ton of confidence right now is the offtake situation.
Right, offtake agreements. For anyone who doesn't follow mining, that's basically pre-selling your future production, correct?
That's exactly it. And they've already secured contracts for about 75% of their planned output.
75%, so 3/4 of their product is already sold before they've even really started.
Just think about that. Your buyer is guaranteed. It's a huge de-risker.
Okay, but let me push back on that a little. Are these take-or-pay contracts? And doesn't pre-selling so much actually increase the pressure on them to hit that 2026 timeline? What if they're late?
That's a very sharp question. And you're right, it does shift the risk over to execution. If they delay, they'll have some very unhappy contracted customers. But having those agreements in place is a massive commercial backstop, and management's goal is to get that last 25% locked down by early 2026.
But they're not just a one-trick pony with rare earths. They're diversifying.
They are, and it's a smart move. They're moving into the antimony market.
Antimony?
Yeah, it's used in specialized batteries and flame retardants. That market's projected to hit almost $2 billion by 2031. It's a nice little tailwind for them.
And then there's the copper play. This one seemed different. It's not mining. It's more like they just bought a big pile of it.
It's a strategic logistics play. They did a $20 million all-share deal to acquire a stockpile of ultra-high purity copper powder.
And that's valuable for
defense and aerospace. It gets them in the door with a whole different set of critical Western buyers. It really broadens their exposure.
So let's talk about the mine-to-market part of this. It's not enough to dig it up in Greenland. You have to process it.
And you have to process it near your customers. That's why they've set up a 50-50 joint venture for a rare earth refinery in Romania.
Romania. Interesting. So that puts them right on the EU's doorstep.
Exactly. It gets them closer to both the U.S. and EU end markets, and it means they can sell a more valuable processed product instead of just raw dirt. It's all about capturing more of the value chain.
This whole integrated strategy, it brings us right to their economic moat. What makes these assets so hard to replicate?
Well, the primary mode is just raw geology, the sheer size and the grade of the Tanbreez deposit.
The grade, meaning how concentrated the valuable stuff is.
Exactly. They're reporting high concentrations of things like niobium pentoxide and cerium dioxide. The numbers are up around 1,700 ppm.
Can you break down what ppm means for us? Why should an industrial buyer care about that number?
ppm is just parts per million. So think of it like the richness of the ore. A higher number means the rock is packed with the good stuff.
So it's cheaper to get it out?
Dramatically cheaper to mine and process. It leads to lower costs and a higher quality product. That's a huge competitive edge.
But the real moat, the one nobody can copy, is the geopolitical one.
Oh, absolutely. The fact that it's in Greenland, a Western-aligned jurisdiction, is everything. Right now, China controls over 90% of the global supply of processed rare earths.
And for Washington and Brussels, that's not just an economic issue anymore.
It's a national security crisis. Finding a stable, non-Chinese source is a top priority. That alignment is an incredibly powerful moat.
They're also building an operational edge, which I found interesting, this mobile lab they bought.
Yes, the mobile lab for on-site REE analysis. This is a game changer for their drilling program. It cuts the time it takes to analyze a drill sample down to just 80 minutes.
80 minutes. In mining, that's basically instant. But why does that speed matter so much now, years before production?
Because for their 2026 drilling campaign, it means their geologists get results back right away. They can adjust the drill program on the fly, find the best spots faster, and update their resource model almost in real time. It just accelerates everything.
Okay, let's switch gears to the financial reality. Great assets cost a lot of money to develop. The numbers on the income statement look pretty tough.
They do, and you'd expect them to. When you're in this heavy investment phase, the metrics will be negative. We're talking a net income loss of around $52 million.
Which gives you a negative PE ratio, negative return on equity, all red flags if you don't know the story.
Right, so the real question isn't, are they profitable? It's, can they afford to get profitable? You have to look at the balance sheet.
And how does that look?
It's actually providing a pretty good cushion. Their debt-to-capital ratio is very low, just 0.14. They have about $172 million in assets versus $80 million in liabilities.
So they're not drowning in debt?
Not at all. It gives them the freedom to execute without a liquidity crisis hanging over their head.
And this brings us to what might be the most important financial point for shareholders: the funding they secured.
This is the big one. They secured $120 million in non-dilutive funding from the U.S. Ex-Im Bank.
Okay, let's define those terms. Ex-Im Bank is?
The Export-Import Bank of the United States. It's the official export credit agency of the U.S. government. So their involvement signals major strategic interest from the U.S.
And non-dilutive is the magic word here. It means they didn't have to issue a ton of new shares to get that cash.
Exactly. It protects existing shareholders from having their ownership stake get watered down. It's a massive, massive de-risker for a developing miner.
So looking forward, what are the key events in 2026 that you're watching? What will prove this thesis right?
The first quarter of 2026 is going to be critical. There are 3 big checkpoints. First, management needs to finalize that last 25% of offtake agreements.
Close the loop on demand?
All right. Second, we need to see the launch of the 2026 drilling campaign and, see that new mobile lab in action. Faster results should mean faster news flow.
And third,
we need to see dirt moving. Physical progress on the pilot plant construction in Greenland. They're targeting it to be ready by May 2026. Hitting construction milestones is undeniable proof they're executing.
And all of this is happening with these huge macro tailwinds at their back.
100%.
Yeah.
The U.S. and EU are actively pushing policies to support critical minerals. Critical metals gets named in this stuff.
Yeah.
So any new government funding program could be a huge boost.
We can't ignore the speculative side either. We've seen the stock jump 70 or 80% in a single day on rumors of U.S. government interests.
That speculation just shows you that the market is trying to price in the strategic necessity of this asset. It's not just about the value of the minerals anymore.
Which is a perfect time for a reality check. Let's talk about the bear case. What could go wrong?
The number one risk is still execution. Building a complex project in the Arctic is incredibly difficult. Any significant delays to that 2026 timeline will mean they're burning cash for longer, which will frustrate investors.
And the volatility we talked about, that's a double-edged sword. It's a huge risk for anyone trying to time this.
A massive risk for short-term holders. You can see these huge rips higher, but you also see quick, painful drops of 5 to 10%. This is not a comfortable stock to own unless you have a long-term view.
What about valuation? It's been trading above $17.
That's the third risk. The analysts' strong buy targets are more conservative, around $12. If there's a delay, the stock is vulnerable to a pretty quick and severe drop. It suggests current prices might be a bit stretched relative to that 2026 date.
So, given those risks, how strong are the mitigating factors?
They're very strong. That $120 million in non-dilutive funding is a game changer. The 75% pre-sold output is a huge commercial backstop. And maybe most importantly, institutional money is already here.
What's the ownership level?
It's reported at about 86% of the float. The so-called smart money is clearly comfortable with long-term risk here.
So let's bring it all together. What's the final verdict? What's the overall market mood?
It's strongly bullish, quantitatively speaking. The sentiment scores are high, and the technical momentum score is through the roof. And that momentum shows that big money is moving in fast on this national security angle.
And they're reinforcing that narrative with key appointments, too.
They are. Adding Rear Admiral Peter Stamatopoulos to their advisory board, that's not subtle. That's a huge signal to the market that they are leaning into the defense and national security story.
So we're giving the final investment thesis a score of 8.5 out of 10. Can you summarize that core thesis one last time for us?
Sure. Critical Metals gives you leveraged exposure to a truly world-class rare earth asset. It's strategically located, and it's been significantly de-risked by government financing and those pre-sold contracts. It is a multi-year hold that depends on them successfully executing a very complex but strategically vital project.
And in terms of an actionable plan, we see two ways to play this. The primary one is a multi-year hold, right? Targeting that 2026 to 2030 window to really capture the full production ramp up.
And for anyone who's a bit more tactical, the volatility creates opportunities. We'd suggest looking for pullbacks into that recent breakout zone, somewhere between, say, $10 and $11. That seems to be a strong floor where institutions step in to buy.
Which brings us to our final provocative thought for you to take with you. Given the absolute urgency of Western governments to secure their own mineral supplies, how much higher is the strategic premium on an asset like Tanbreez really worth? What's the price if policymakers see this not as an investment, but as a fundamental matter of national defense?
Something to think about. Thanks for diving in with us today.